Stocks reach short-term target on Nvidia popping to all-time record highs. However, junk bonds are still exhibiting a bearish divergence relative to stocks. I'll explain what I mean. We will highlight a trade for Spotify that we took recently, and we'll also look at weekly charts of dollar and gold to see if dollar is indeed in a uptrend and if gold will pop higher or maybe it will continue lower. All this and more in today's edition of MasterChartsTrading.com market recap for Saturday, February 24th, 2024. As always, keep your likes, the shares, and the subscriptions to this channel going. It's what keeps this channel going. Thank you very much for it. We will also cover various securities in the members only section, such as market breadth, crude oil and Bitcoin, as well as various ETFs, large cap stocks, and various speculative securities. For example, Baxter is an interesting pattern, as well as Victoria's Secret. So stay tuned for that. Throughout the presentation, we'll be using my proprietary MasterChartsTrading.com market recap, market indicators, which you can see on this chart. There's green, blue, red, and yellow lines. You can find out more about it by going in the description of this video. So S&P 500, we're looking at S&P 500. It gapped to new records. There's the gap. I'm gonna zoom in. There's the gap between 21st of February and 22nd of February. And then the 23rd of February, Friday, we again were at new all-time highs. So, as always, there is, questions of how far we will go. It's really difficult to say because picking tops is even more difficult than picking the bottom. So there is really very, very little way we can answer that question. I'm going to show you in a few seconds of how we can estimate the move higher. But as far as the top, very difficult to say. I mean, it really, right now, it always hinging on Nvidia. So there's that gap between 21st of December and 21st of February and 22nd of February. Notice that it gapped higher and continued higher. So Nvidia is up over 260%. If you're a subscriber, alert was sent in February of last year, over a year ago in 2023, and basically you should have stayed in this position. No other. I would have stayed in this position because my stop would have been at the blue line. So if you stayed in this position, congratulations. I would continue holding Nvidia. As far as stocks are concerned, right this instant, we can look at S&P 500 on the weekly time frame, and I have already shown this chart in the past. So the pattern I'm referring to is the high from July 2023, the low from October 2023, and again the high from December 2023. So it's just like this giant triangle, upside down triangle formation. And the depth of this triangle is around 12%. So we did break out in late December, mid-December of 2023 to new records, and we continued higher. So the depth of this pattern, like I said, is about 12%, but this is a exponential chart, so a logarithmic chart, I'm sorry. So the depth is, you can just count it in points, so it's 494 points. The depth of this pattern is 494 points, and we have now duplicated this pattern on the upside with 498 or so points. Literally, we just we made this target is there. Normally, traders look at this type of thing and say, okay, we moved pretty high, so we might as well take some profits. So we are there as we speak. I think profit taking could finally begin. That does not mean we're going to turn around and collapse into a bear market. It just means that people who have, taken positions recently are now very satisfied and they want to lock in some gains. I would be thinking about locking in gains as well. So in fact, I'm going to show you my position for S&P 500 ETF SPY. Notice this. Alerts for multiple alerts sent back here in February of 2023, again in April of 2023. My personal position, the most recent one I bought was on October 2023, right there. So how do I know to take a position? It's pretty obvious if you just look at this chart. We have a new high, we have a pullback towards the blue line, we buy and pull back towards the blue line. That's all there is to it, really. There's no magic. We moved higher. I did take some profits on my position on January 11th of this year, and then I'm holding still about a half of my position. We're now at new records. I'm still holding half of my position. How high will we go? Again, there's no way to know. But as I just shown, we have reached the target of this particular pattern, and it's reasonable to expect a profit taken to take place. Long term, however, the target is probably significantly higher. So we can just see that, I'm going to remove all of those drawings, so we can just see similar type of pattern. I'm going to draw it in again. So this is the pandemic low, if you guys remember that, from March 2020 or so. So move up, a giant pullback into October 2022. This is October 2022. Remember, this is a weekly chart, so each candlestick is a week's worth of activity. And there is a breakout to new all-time highs. So all-time highs right there. So there, we just broke out to new all-time highs. All right, so if we what I just showed you was this little tiny pattern with a bottom in October 2023, but if we take this bottom in 2022, we can sort of estimate of the depth of this pattern. Okay, so the depth of the pattern between high in December 2021 and the low in October 2022, and now a new breakout in January of this year, 2024. That's around 1,300 points, or 38% or so depth. And we can estimate the same move. Where is it gonna take us? So we're looking at 6,200 for S&P 500. All right, so that's quite a bit higher from today's prices. I mean, we're already a little bit towards there, but if we continue in the same manner, we could be, if we just continue straight up, which I don't know if it's going to happen or not, no way to know, but if we just continue straight up, we'll get there in late 2024, early 2025. Again, no way to know if it's going to happen. But I think we will get there, most likely within a few years, for sure. And so the way things are going, things look pretty good for stocks. Economy itself, we have inflation going on, we have difficulties with people finding jobs and making ends meet, but that doesn't mean that the stock market cannot continue to, another 20% higher towards 6,200 or so. Okay, so that's a very bullish, optimistic perspective. However, it's not outrageous because I just showed you that it is indeed what's happening with on the shorter term targets. Looking on another security which I do monitor, and that is high yield bonds, JNK. So JNK high yield bonds, we're gonna look at JNK. So high yield bonds and stocks correlate highly. They do the same thing more or less. So this is a correlation coefficient down below here, and you can see that they're doing pretty much the same thing. It's quite positive most of the time. Sometimes it goes negative, sometimes it does its own thing, but by and large, high yield bonds, junk debt, JNK, are doing the same thing. And so far, high yield bonds have not made a new all-time high. Okay, so you can see that high yield bonds right there where I'm hovering made an all-time high in 2021, actually, early 2022, and then they were just moving back and forth. But for now, we haven't gotten there yet. So that's number one. If we look on a shorter term time frame, we're looking at daily chart right now. This was a weekly chart. So each candlestick is a week's worth of activity. You can change it. You can see you can change it. High yield bonds on the daily time frame, it's even more obvious. So I highlighted this divergence. The high was made on 52-week highs were made in December of 2023 last year. And so far we haven't made a new high, but we're super close. So I think if we make a new 52-week high, I would sort of just relax about that, and the divergence will be resolved in favor of the bulls, in favor of people who think that the stock market will continue higher. If you're a subscriber, stay tuned. We'll also cover various securities which are called market breadth. So bullish percent index, percentage of stocks above the 200-day moving average, as well as call put ratios. We will cover those in the members only section, and the divergences are also there. So this is showing that a small percentage of stocks are contributing a large amount to the movement of stock market. All right. However, sometimes those divergences get resolved in a positive direction, and it does look like junk debt will make a new high, and in that case the direction will be again the resolution for this divergence will be positive. So let's see what happens in the next few days to a few weeks, and if this divergence gets resolved positively, then we can relax about that. I wanted to highlight a recent trade for Master Chart Trading that we did. Here is Spotify Technologies. If you have a Spotify account, you know you can enjoy good music. And pretty much everybody I know has a Spotify account. However, weirdly enough, they're still losing money, which doesn't stop them from, being valued in the sky-high territory. The stock is worth, $250, right? And they are still losing money. Still, you can see money loss, and nobody really cares. They seem to be doing just fine. So we have traded the security. Latest alert occurred right there in August 2023. Alert was sent. Why was an alert sent? Let me just kind of backtrack a little bit so that you will understand the thinking behind our method of trading. So if we go back to November 2022, I believe these are all-time lows. Yes, they are indeed all-time lows. So in November of 2022, where I'm hovering right there, these are all-time lows, and really nobody cared about Spotify. However, something started to happen. Most likely insider trading ideas started to leak out because they were losing money back then. There are negative earnings that occurred in January of 23. Negative earnings in October 22. In fact, they were more negative in 2023. Okay, so why did the stock go up? Nobody knows, but my suspicion is there is insider information leaking out somehow. So at this point, we're looking at the stock, and it's like nobody really cares about. However, it's going up, and right there on 6th of March 2023, we finally have a breakout. Okay, I didn't send an alert back then because it wasn't on my radar, but the breakout is there. Okay, Okay, so that means that at this point the stock is no longer in a downtrend. It is now in an uptrend. We should be looking for buying opportunities. We did just that just a few months later. Actually, significantly a few months later. I was just not watching the stock at the time. Notice how the stock moved higher and then pulled back towards the blue support resistance line right there where I'm hovering, and then we bought it right there on 28th of August 2023. That's really all I needed to know. I mean, we can again look at earnings. For example, here from March 2023, quite negative earnings, horrible earnings if you ask me. They're losing money. Even more negative earnings right there in June of 2023, yet there's a buy signal. So we did go ahead and send an alert out to my subscribers. Subscribers are now up over 80%. Okay, you don't need to be Warren Buffett to know this stuff. You just need to have the indicators on your chart. So these indicators, this green, blue, red, and yellow line, is really all you need to know to make this type of decisions. Hopefully you made that decision. Now you're 81% richer on this particular stock. Congratulations. Let's move on to the Forex universe, dollar versus gold. So first we're going to look at dollar. Here's DXY, dollar currency index. It gave us a few whipsaws, few false signals. So here's first false signal in October 2023. I thought we're going to go higher. We didn't. We turned around and we continued lower. Another false signal right there in December 2023, which didn't really take us far. However, notice how, interestingly enough, the price bottomed right around the yellow line. So for me, this was a clue that something is off with this downtrend. We turned around again and continued higher to close yet again above the blue line. Question is right now, is this a true or false signal? So on daily charts, this is a daily chart, we have a true signal. So daily just means 1 day's worth of activity, right? We can look at the weekly chart of the same security, and weekly means that we are looking only at a Friday close. Okay, so on Friday, did a security close above the blue line or below the blue line? If it closes above the blue line, there is more chances that the signal will be correct, because weekly charts are the bigger the time frame. I noticed this on multiple occasions. The bigger the time frame, the more valid the signal. So let's say you're trading on 30-second charts or 5-minute charts. You will have more success on 5-minute chart versus 30-second chart. Let's say you're trading on 4-hour chart versus 5-minute chart. You will have more success on 4-hour chart. If you're trading on daily charts versus weekly charts, probably you'll have more success on weekly charts, meaning that you're only going to trade once a week. You're going to either buy or sell on Friday. So if we just did that with the dollar, if we only traded on once a week, all right, latest signal actually didn't yet occur. Notice that we did not yet close above the blue support resistance line. We tried right there on the week of Monday the 5th of February, on Monday the 12th of February, and yet again this Friday, this weekend, rather this week, the Monday the 19th of February, we have tried to get above this blue line, but we didn't. Okay, so this means that there was not yet a weekly signal for the dollar. We did get a signal for the dollar on daily chart. Okay. We can also look at gold. And why do we care about gold? Because gold is traded in dollars. It's XAU divided by USD. If the bottom part of this equation, USD, is getting bigger, it will pull this currency pair lower. So far, gold is giving us consistently a buy signal. Okay, we're seeing buy signals when we close above the blue line. I'm just highlighting those signals so that people understand what I'm referring to. And there were multiple of those signals. Okay, there are multiple here as well, and the latest one was this week. Okay, so if we take, if we zoom out and we just look at weekly chart, let's say we're very long-term traders, we don't really care about daily fluctuations. We don't even look at the charts during the week. We only come over and look at the charts once a week on Friday before close. And if there is a signal, we will take it. Okay, so let's just pretend that we took the signal on this Friday, February 23rd, a few days, yesterday. So technically speaking, right now gold is in an uptrend and it's giving us a buy signal. Dollar has not yet done so on the weekly time frame. It only has done so. We only got a signal for dollar on the daily time frame. Okay, so if we take this, we should be buying gold. Okay, if we look at weekly chart of dollar, there is not yet a buy signal on dollar. If I had a buy signal on dollar, I would just not buy gold for sure. So what this is telling me is that we need to be pretty flexible in the way we're looking at things. I was fairly certain so far that dollar will continue higher. So far it hasn't. It's been encountering quite a bit of resistance here at the blue line. So again, we will be watching extremely carefully what's going to happen probably just next week. And if we don't see a buy signal on dollar, I'm more and more inclined to go with gold. Okay. If you're a subscriber, you will know that I have repeatedly said that I'm just not sure what's happening right now with dollar and gold. So I am sort of not trading the securities. But the way things are looking, they don't look too bad for gold. Okay, so if we don't see a move higher for dollar very soon, I think I'm gonna go with what gold is telling me at this point. What do you guys think? Any of the securities that I mentioned, do you trade? Did you trade S&P 500, high yield bonds, Spotify, dollar, gold, or Nvidia? Make a comment. What do you think is going to happen to any of them? If you're not yet a subscriber, head over to masterchartstrading.com. Click on sign up one of the products. So I have two products and one package. I have the trading indicators. So this is a trading indicators. You can see them on this chart. There's green, blue, red, and yellow line. You can trade pretty much anything under the sun on most time frames. But again, I don't recommend too much trading on intraday charts. So I think daily meaning that each candlestick is a day's worth of activity, is probably where you want to stop if you're a human. If you're a robot, that's a different story. You can probably trade on very short-term time frames, and you may or may not make money. That's a completely different story. So these are the indicators, and you can have them on your chart for TradingView.com. So TradingView.com, you only need a free TradingView account. Once you have a free TradingView account, come back to Master Charts Trading, sign up, and I will open the door for you on your TradingView account. Newsletters. So newsletters, I send out daily alerts on various securities, as well as weekly members-only videos. These videos will contain various securities that we cover. So, for example, this week we'll cover market breadth, crude oil, and Bitcoin, as well as various large cap stocks, ETFs, and speculative securities that we trade. And of course, the best deal is to get both trading indicators and newsletters together. And right now I have added the yearly plans, so you can get both trading indicators and newsletters at $49.95 per month. And that is you save 2 months worth of subscription versus the monthly subscription. You can see it's a $10 discount per month. You can also do it on PayPal, but I haven't added the yearly subscription plans by PayPal yet. So if you have credit cards, Apple Pay, GPay, monthly and yearly subscriptions are probably the best way to go. Let me know if you have any questions. Otherwise, have a great trading week again. Thank you for watching. Bye-bye.